In a bit, Rohit Srivastava is joining us. Rohit, good morning. Good to have you with us here. What is your sense, Rohit, so this morning? 100 points?
Well, that's already on the screen. So the question really is, where do we go forward from here? I think right now this is a one-day panic, but definitely it's a situation that's going to be around. I mean, that's been my sense, and this vote actually puts it more in perspective. That we're going to see problems down the line. But if you're looking at very short-term markets, is this the start of a sell-off, or will we still get some more upside? I think we'll have to watch a couple of levels for that to be very certain, because when you're trading, you want to be sure this is the start of a sell-off. Sometimes you can get a one-day reaction and then you can bounce back as well. But my overall sense is that whatever bounce back you get as well is only a counter-trend move. We are just retracing some of the losses we made in the last quarter, because the market was falling from March all the way into May, June. And once that retracement is complete, we will see another sell-off on the downside. And I think as far as this event is concerned, which is what I think is on everyone's mind, the view has been very clear that Greece was backstopped in the first bailout program a couple of years ago, and the contagion effects appeared to be pretty much contained, because most of the debts have been moved out of the private into various institutions. Now the whole problem is not that. The problem is, how is the rest of Europe going to view the debts of the other nations that are around? How are the people going to feel about it? And I think this event puts it in perspective that there could be a lot of risk off that can happen. When you start viewing the debts in France and Spain, you'll start wondering about how they're going to deal with those problems, because the problem is the same. It's just that they are many times bigger than Greece, and they are capable of pushing, kicking the can down the road for many more years. But the end result is going to be the same. Eventually, the people will say, we can't take this anymore. And I think Greece has started that line. And then the question is, how are investors going to react? If they're going to see that risk, are they going to take risk off right away, rather than wait? And so for that, the key indication is going to be bond yields. I think that's what we're going to be watching most closely. And if bond yields start showing moves up, I think the indication will be clear that people want to, move out of these debts before they get into trouble on each one of them.
Rohit, so with this kind of a start, 65 for very short-term traders, any advice? The Nifty is down 65.
Well, for the short term, we've maintained the trend to be up, and I think as long as we stay above 8,300, there is room for you to stretch maybe to 86, 86.80. The upside I'm keeping is up to 86.80. Probably that's the best case scenario right now. So till we get a clear trend down, it's not yet a selling opportunity. And like I was saying earlier, that sometimes such an event news can be a one-day knee-jerk reaction. But this is also not a runaway rally, so it's not that you can just go out and buy everything. You're just trading for the next 100, 200 points. It might be on a very narrow list of stocks. There are a lot of stocks that are still not participating in this move. In fact, on Friday itself, the mid-cap indices were down even as the Nifty was up. The breadth was negative. So you have to be very selective, which is difficult because you can end up identifying the wrong thing and getting stuck when the breadth is not in your favor. So not a very great trade, but it's not yet ready to sell off. So you shouldn't really be looking at this news yet to just go out and sell. But we would wait for the market to give us those clues from some short-term indicators, which is still not turned to the sell side. We'll be watching how they do at the end of the day. But once we have gotten higher, I think we would be looking at selling. So it's not that we are looking at like I said, it's not a runaway rally. Once we've completed this move, another leg down is likely to unfold, is what I think. And at that point, we will look at more sell side opportunities. Currently, we remain long in most of our funds.
Okay, all right. 236 off on the Sensex now. So 27,857, 70 points off on the Nifty, 84.14 is what you've got. Harrier, let's talk about a couple of stocks. Rohit, I'm also coming to you on stocks. Hindalco, Harrier, first up. At a multi-year low now. I mean, they're breaking 110. Would you buy it? Yeah?
No, no. I think we have been negative in aluminum for a fairly long time, and I think with the China slowdown happening, we would believe that the entire metal space would be under considerable pressure. So I don't think, no, even though let's say Hindalco may be at a multi-year low, and in fact all aluminum stocks are actually at a multi-year low, I don't think we would be too keen to go in and buy. I think my call for any metal stock right now is to just stay off metals for the time being.
Rohit, what's your sense? Hindalco?
Yeah, very similar. The trend down in metals is not really reversed. In fact, it's continuing. If you just look at the moves in the last couple of days across, the base metals, the underlying prices have been falling consistently after they had a mild rally sometime in May. So I think the trend down remains. Copper itself fell to $2.57. In fact, crude itself is falling. So the only area which I focus, which can actually benefit from falling commodity prices, one of them is in terms of crude was OMCs. So oil marketing companies have been an area which we've recommended for some time, and I think that theme remains. There's no change. I think oil prices, crude itself would probably fall to $42 to around $38. Somewhere in that range is now confirmed after the move down to 55 in the last trading session. So with that indication, I think we're looking at much lower prices in crude. HP, BP, IOC might be the best place to be in on that theme. But avoid metal stocks completely, because base metals are falling. And the one odd area where you're seeing rising prices is actually the agro commodities. So you're seeing agro commodities, and I'm talking about global agro, wheat, rice, soya, all of them have shot up in the last couple of days. Not so much in sugar, and we would have to actually look out as to who could really benefit from the trend of rising agro commodities around the world.
Okay, so it's a no to commodities, Hindalco. I mean, so that's the technical side, and the price, of course, international aluminum prices, commodity prices, they all seem pretty weak. So, I mean, Rohit, for most other names there, the entire commodities pack, it's a no, right? I mean, there's nothing, no reason to look at them.
Hindalco, Tisco, Sesa, Sterlite, the entire lot we would avoid.
Okay. All right. Hariyar, any thoughts on Tech Mahindra at 460 now?
No, we actually like this stock. Probably I think there were 2 quarters of bad guidance, and that probably explains why the stock is corrected from about 540 down to 460 levels. I think we have 2 reasons to like Tech Mahindra. The first is that Tech Mahindra has a fairly large exposure to Europe, and what we expect is that eventually Greece will go out of the of the eurozone, and when a weak economy exits, the currency tends to strengthen. So the euro is likely to strengthen as a result of the Greek exit. Now, with the euro strengthening, I think someone like Tech Mahindra would benefit substantially from the euro strengthening. So, that is one reason we like. Second, we believe that with the latest acquisition that Tech Mahindra has done in UK, they are making a very important foray into the healthcare outsourcing space. And we need to also understand that with Obama passing the Affordable Healthcare Act, there is a big opportunity that is opening up, and Tech Mahindra is positioning itself in the very perfect space. So I would believe that at a price of 460, 465, Tech Mahindra to me makes for a very compelling buy.
Rohit, IT index, Tech Mahindra, if you have a specific sort of perspective, any thoughts there?
Tech Mahindra has been one of the weakest in the IT pack, so it could be a little oversold. I think a short-term trade-up might be possible. But if I look at the IT index, so I look at Infosys, then the picture looks very different. It actually looks more bearish than bullish right now as we enter into the results season. So I think that's a little mixed view. I would probably be negative on Infosys and Wipro, but might see some positive side to Tech Mahindra. But if I look at just the BSE IT index, which tends to be more weighted in favor of the bigger IT stocks, it also looks like it might head lower. The other cue I would probably take for tech stocks in general would be from the US, which is the NASDAQ index, and I think that itself also has broken its multi-week lows this week. So so that too is giving us an indication that there could be selling pressure on the tech side. So look at only short-term trades where you've seen a big sell-off. So Tech Mahindra could be a buy, but the rest of the IT stocks are probably still looking weak.
Okay. You've got private banks, public banks, all lower. You've got metal, commodity names all lower. I mean, actually, those are the two areas where there is a significant amount of pressure, except, of course, Kotak Bank, which is higher in the banking space. I mean, but that's the only one. Otherwise, it's all pretty much kind of down and out. Rohit, have you looked at Maruti and any thoughts at a near all-time high?
Yeah, I think Maruti is one stock, I think, out of the auto sector pack, which is still doing well. Most of them have actually done poorly over the last quarter. But we are seeing some strength coming back in Maruti, and also I think Mahindra, that's the other one which is showing some possible near-term strength. If it breaks out maybe above 1320, then you could see some upside there too. But we would remain tight on stop losses wherever we trade these stocks for upside. My general sense on the auto sector as such is that it probably turns lower. It closed down for this quarter, and that's giving a sign of possible weakness going ahead. But the strongest stock remains Maruti. So if you're trading any upside, you'd probably want to be in Maruti. If you're looking at downside, you'd probably start looking at selling telcos, and that's how it's been. Harriet,
June numbers were just under a 2% year-on-year growth. I mean, so of course base is very large, so I guess there is some slowdown. But any thoughts on this one?
No, I think if you look at the passenger car space per se, I thought the entire passenger car space kind of disappointed in the last set of numbers. It was actually the MHCV space, which is the medium and heavy commercial vehicles, that actually saw a huge growth. So I think after a huge rally that we have seen in a stock like Maruti, I would probably be a little cautious. I think the real opportunities are opening up in stocks like probably Mahindra and Mahindra, as Rohit was rightly mentioning, and probably a smaller stock like Ashok Leyland, which has a very big exposure to the MHCV space. I think these are the stocks that are probably emerging as value stocks within the automobile space. But Maruti, I think because of their large exposure to the passenger car space, I would be a little cautious at this point of time.
Okay, I think we'll leave it there, gentlemen. Thank you very much, Rohit and Harriet, for joining us. Great speaking with both of you as always this Monday morning, and I hope to catch up again soon. We're going to take a quick break here. We're back with Jayesh Mehta from Bank of America on the other side. Back with him in 2 minutes.